Hey traders, Raghee here. Happy Wednesday, everybody. Hope everyone's doing well. It is FOMC Wednesday, by the way. So just to kick things off here at Charts and Coffee, this is the kind of day that I consider a caution day. We'll talk about, if you have some questions about what it means to deal with this 2 p.m. FOMC event. The main thing is basically, what is the market anticipating the Fed's going to do with rates? What's their take on inflation? What are the headwinds? And are we going to see any kind of tantrum related to taper? Are we going to see any type of concern related to the longer end of the yield curve? Are we going to see any concern regarding what the Fed's take on the current bond yield is? So that's really going to be a big part of what we're dealing with. So good morning, everybody. Again, we have Kapow, as we endearingly call him here in my office, slated for 2 p.m. Remember, it's not just the 2 p.m. release of the statement. It's actually also the presser that comes after. So let's kick things off with, hey there, my friend James. I'm still long. Freeport McMoran. Okay, let's jump on over there. So Freeport McMoran is definitely one of those names, along with a handful of others, that I am looking at from the standpoint of being the reflation trade, that trade that is tethered to the expectation for continued inflation, that inflation that the Fed says really isn't there yet. What planet are they living on? Clearly not Earth. But what we have, though, are setups that we can take advantage of based on that reflation trade. And you'll notice in Freeport McMoran, so James, we're looking to set that up again. Now, think about the break even on the trade. So by the way, this setup is from the Sector Secrets mastery that we do and that I do. And what James is talking about is what we're doing in the group, which has been taking advantage of the proxy, the stock proxy, the company that we can get long in on the equity side while I'm very bullish copper. So I don't mind playing copper futures. A lot of folks don't want to play futures, and that's okay. But there is no copper ETF that's liquid. And so what we do is we go with Freeport McMoran, which tracks beautifully with the uptrend that we're seeing in copper. So yeah, James, think about the break even on that trade that we had before. We're still ahead on that. And remember, we've already hit the target, the first target. We've hit that T1. So by having hit that T1, we're at a break even. And then we might have overlapping positions. So within the context of this overall trade, I've had many times where I've sort of rolled into the next position while still managing the previous one. And because we're playing with options, in terms of the pullback, although the price of this particular stock, I've mentioned if traders want to actually build a position via the stock, that's absolutely fine. A lot of the types of positions that we trade in the Sector Secrets are sub $50 names. We're NGE, Ford, GM. So there are a lot of alternatives to simply buying the option. We can go with the option and the underlying. And I like positions like that because I like to build my underlying stock portfolio as well while I'm trading options. And the stock doesn't have the theta decay, the time decay, right, issue that we have on the option side. So with that being said, yeah, we're probably going to be looking for another opportunity to get in, James, and that might overlap with the other position that we have now that we've scaled out once, paid ourselves while we can, not when we have to, and are sitting at break even. So we are definitely looking at, we are still looking at managing that one while possibly entering another one. So thanks for the question. I appreciate that. Next up, Nicholas asks about Etsy. Sure. Let's jump into Etsy here. And there we go. Looking at Etsy, it's currently in a daily squeeze and has pulled back. So Etsy for me, Nicholas, if the touchstone of the majority of my trades relies on a trend, I don't have a clean trend here. I certainly don't want to short Etsy. So let's eliminate one side of the trade from what I'm interested in. Not interested in shorting Etsy. However, I would say that because, and you can see here, so for those of you that don't know what I'm referring to when I discuss something like double green or the structure of the market, etc. Let me show you what I mean here. And what I'm referring to, let me get my screen drawing tools up and running. All right, so what I'm referring to is this second column, or row, sorry, the second row, the lower row right here. So the upper row is the 8, 13, 21 exponential moving averages, the way that they're relating to each other, the way that they're tracking. And the bottom one is the 34. I separate those two. I separate the 8, 13, 21 from the 34 because the 34 for me is that moving average that's indicating the trend, while the 8, 13, 21 is more about the sentiment and the momentum, more of a near-term read on price action. So that near-term read, double green, so these two green blocks right there, that's telling me that there's some bullishness near term. The yellow boxes, that 34 EMA, is telling me that we're still kind of in a distribution market trend. So again, what I'd end up doing in a situation like this is identifying the range and using something like a ready aim fire, using something like a slow stochastic, right, a slow stow, to find where we are oversold and then look for the buy. So I'm not looking for a trend follow in Etsy because according to the way that I measure the trend, I don't have one. But I clearly want to focus on the long side, and that would be more of an oversold buy because we're in chop. So thank you for the question. Moving on to Hey there, Living. Good morning. Can I please take a look at BA? You got it. BA double green. You know, look, for a long time it was sideways. And so when I talk about eliminating one side of the trade, this one's easy. Look at the trend that preceded the chop. Chop, 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 right? And then we're right back to double green. Okay, so with that being said, when a trend transitions to chop, or in terms of our paint by numbers, look at the trend, when double green goes to yellow, we don't want to suddenly reverse and look at the markets from the standpoint, which is very wrong, but what most market participants do, which is if it's not heading higher, clearly it's heading lower. Wrong. We know that once that uptrend is broken and transitions, it's transitioned into a distribution market trend. It's transitioned into a chop. So with that being said, this reemergence of the uptrend here doesn't surprise me. And we definitely want to focus on some pullback buys. Now, whether that will be a pullback buy based on some VWAPs for me, whether that's going to be a pullback buy based on some volume levels, you know, that's going to be where I'd like to see everything stacked. You know, we want to see, or in the, I don't know how many of you are familiar with the author Simon Sinek, the Start With Why guy. We want multiple whys, right? Why would I want to buy volume? Why would I want to buy volume weighted average price, major psychological level, retracement to the wave, etc., a reversion to the mean on the VWAP? However it is that we look at the market, our set of tools, if we can stack them, we can stack the levels in a particular zone or level that indicates that there's more than one Y as to that level holding, we're in a good spot. So really, yeah, I'm open to the longs, and I just want to focus on that stacked multiple Y level. Right now, I'd say it's going to be closer to 227. If you know, so we still have a ways to go on that pullback. If I want something more aggressive, it'll likely be something between maybe the 8 exponential moving average and a volume weighted average price level. So thanks for the question. Can we check out, hey there, Webuilt, can we check out NVAX? Sure. So not a trend for me, not a short, because the trend that preceded the chop was up. We're coming off of a really nice point of control, nice volume level. How do I gauge that? Look at this volume jutting out from the right side, the right edge of this chart. It's as if the market has this foothold that it can stand up, it can push off from, and that's really what we're looking at there. So with that being said, oversold chop buy, volume confirmed, nice level, nice level. But where we sit right now, there's nothing I can do in the daily time frame. But let me just mention, doesn't mean that you may not find a trend that might have pullback opportunities on a 1 hour, or maybe some kind of setup on a 15-minute or 30-minute. So if a daily time frame is indicating some strength, right, and you're thinking that there could be some continuation, then you can shorten the time frame and see if you can't hop on the ride with that shorter 1 hour, 30-minute, 15-minute setup. All right. So thanks for the question. All right. Next up, let's see. Greetings from Australia. Wow. Wow. Well, good evening, right? Thanks for joining us. Next up is, here we go. What up? Doc asks, at what point are bonds attractive to buyers since yields are going up? So what up, Doc? My look at that over the years, and it doesn't happen exceedingly often, but my look at that is going to come back down to typically, well, what would compete with that? So let me show you what I mean by that. So you would look at, say, the way that I look at this, it's going to be a competition for attention. The way that Wall Street, us as investors and traders, pay attention to something is capital, it's money. So I got to follow the flow. What I want to notice is whether or not, and I start with the dividend kings and the aristocrats. That's a dividend conversation. Why a dividend conversation? Because think about the typical dividend payout on those stocks and when bonds might be competitive with that. And that's really, for me, it's not that we see market participants broadly dump equities. It's a very specific type of equity, again, kings, aristocrats, that I think then come under pressure, because now all of a sudden I could lock in a 10-year at 1.5, 1.4, 1.6, whatever percent, and that's locked in. I don't have to worry about the stock moving higher or lower. It then becomes a competitive alternative. And that's the way I look at that. That's the way I look at that. So it's attractive to whom? And it's usually going to be longer term players, pensions, portfolio managers, et cetera. And it's going to be competitive specifically to the group of stocks that are dividend yielding names. That's what I have found is the first layer of positions within a portfolio that get questioned. And that's where we want to look for the evidence that maybe, and by the way, how hard is it to look at some of those kings, whether that be something like Aflac or Chubb, Exxon, Caterpillar? Are we seeing any kind of exhaustion there, weakness there? It's not going to be across all of them because, for example, with CAT, when I'm looking at that ZN, for example, there we go. When I'm looking at that ZN 10-year bond futures, continuing to move higher, that's our bond yield going up. Continuing to move lower, that's our bond yield going higher. But I also know that IYT and XLI in this current environment have been very, very strong. So then you've got to also separate out what industry your king or aristocrat is in. So, it's a bigger conversation, but I hope I've got you started in the right direction. Okay, hope that helps. All right, let's see. Next up is Jay. How you doing? Jan, how are you? How do I get access to both my day trading room as well as my sector secrets mastery room? Okay, so thanks for the question, Jan. I appreciate that. It's all available at Simpler Trading. So if you want to join the futures room, which is a room that I'm in, not all the time. I do all my futures trading in the futures room. So I do a nightly premium video of swing trades and usually a day trading recap. So you guys can learn some of the nuances of my day trading style and then also keep up with some of my swing trades. What are some of my swing trades? Long corn, long beans, long British pound, long Canadian dollar, a cattle. We have crude oil. We have a lot of those longer term swings that we're taking advantage of in this reflation environment using futures contracts. And if I have an ETF alternative or an option, I do like to give people well, that option. The other service, it's a completely different service. It's the other well, I wouldn't say half, because my trading life is really separated into three things. It's my trading, it's my options, ETF stock, swing trading, and then it's my investment portfolios. The other one would be the sector secrets mastery, which, I would say start with one or the other. You'll see we have a lot of masteries here. Start with one or the other. Ask yourself, where is it that I want to allocate capital and learn? And so, this is the sector secrets mastery. And you can find that at simplertrading.com/sector. So it's in those two places, Jan. So thank you for the question. And, my advice is start with one or the other, absorb that, learn that, and then, stack that next set of skills and approach in your trading. So thank you for the question. All right. Next up is Canada. Brian. Yeah. Thoughts on EWC? I was just talking about this. Gosh, when did I talk about this? I have some recollection of this, but yes. Why do I like the EWC? Well, in many ways, for the same reason that I like crude oil, that I like the reflation trade, that I like the Canadian dollar buy. This is really tethered to a commodity-based economy that has a commodity dollar. This means that in terms of the impact on the economy, export of lumber, export of energy, crude oil especially, these are going to benefit the Canadian economy. Financials, by the way, when you look at the weighting of the EWC, you'll notice that financials are very heavily weighted. Well, just like financials have been going bananas in the US, with the type of central bank policy that we're seeing basically replicated throughout the G7 countries, the major central banks, that same policy that we have in the US that's benefiting regional banks and KRE, XLF, you're going to see the financials benefiting all over the globe. And when you look at the weighting of the EWC, you think to yourself, all right, I can see where the current central bank, Bank of Canada, monetary policy, as well as the current reflationary environment is very, very good for EWC. We know that the Canadian dollar, so if you look at the FXC moving higher, and then that's also going to be in many ways tethered to that crude oil narrative. So yeah, I like the pullback buys across the board, Ryan. I think that EWC is going to benefit in many ways twofold because of those reasons. So thanks for the question. Question here on the way that I anchor my V-score tool. Sure, hey there, Grace Vision. Do we re-anchor the V-score end of day versus intraday? Well, there's an end of day V-score, Grace, and that's anchored. I usually go back 1 year, and intraday, the V-score, I anchor to 7 a.m. So the end of day is anchored to a date. The intraday is anchored to a time. All right. Thank you for the question. Thoughts on RIG? Yeah, Dave, they're bullish. I have bullish thoughts about RIG. We're long RIG. So all my cards on the table, we're long RIG. But we're long RIG from, gosh, where are we long RIG from? I'm trying to remember. I want to give you guys the precise levels that we actually set up RIG from. So you can see the kind of stuff that we do when we set this up in the Sector Secrets room. So I'm actually going to show you guys the actual alert. Let me just find it in the room alerts. Here we go. So on the 9th, we got long RIG with that setup. So that's how the alert goes out. It's time stamped. I give you guys a strike, expiry, and then the triggers. At what level, when the underlying stock, in this case, reaches these prices, then I go buy the 3.5 call. So clearly, even at 412 and after this pullback, we're in the money. We've already taken a profit at 420, as you can see. So this is where we're at break even. And then I would like to get into RIG again. So much like that question that James had earlier in Charts and Coffee regarding FCX, yeah, we're going to refire rig. Absolutely. We're going to get long rig again. So that just gives you an idea. This is on this date right there, right? That small candle. That's where we got long. You can see there that afternoon. And yeah, do I want to do it again? You bet. You bet. Absolutely. So my thoughts on rig are I'm in it and I'm looking to get in it again, much like FCX. Absolutely identical to FCX. All right. So Henry has a question. What are the indicators at the bottom of the chart? I've got a custom MACD histogram. That's my V score, Henry. And lastly, that's what's called the JT multi-trend, which gives me the history of the trend. And so that's what's sitting at the bottom of my charts. What do the color of my candles mean? They're called grab candles, G-R-A-B. And G-R-A-B is an acronym for green, red, and blue. Green is bullish, red is bearish, blue is neutral. And you'll notice there's two shades of each, light and dark. The lighter colored green, red, or blue, it's an up close. And the darker shade of the green, red, or blue is a down close, much like you'd notice in a hollow or shaded candlesticks. We can keep that interpretation of up and down closes while I'm keeping the painted colors. So the more green you see, the more bullish it is. Just that simple. Okay. All right. Last couple questions here, and then we're going to wrap it up. Am I familiar with the trade for lean hogs early in the year? Is it time to short? Andres, no, I'm not looking to short lean hogs. In fact, we just have been looking to continue to be long. I just need a pullback. So no, I'm not going to fade this. No, my friend. I think this is going to continue to benefit from the reflation trade. All right. Can I comment on the Powell speech today? Well, I mean, by commenting, I'm going to be looking for volatility, my friend. That's it. That's it. I'm not going to be doing a lot of active trading. We have levels that we'd like to see our futures or stocks, our markets enter. If they enter that on the volatility, terrific. If not, tomorrow's another day. And with that being said, I will see you all tomorrow, same time, same station. Thanks as always for being part of the Charts and Coffee crew. All right, be good to each other, gang.